So the GATME, once again, thanks very much for tuning in. For those of you who are watching along, I appreciate you. For those that catch this later, thanks to you. Also, I appreciate you too. Try and tune in for a live stream one day. You'll enjoy the company in chat. So here we are, starting again. Turn off the drawings on the weekly time frame. You can see we're above the 20 period moving average. All of our moving averages are in a positive slope, and they all have a positive slope. That's the majority of the things I'd be looking out for to define if we're in a positive trend. Also, you'll see that I use the log chart, and that if you're to zoom out on that, you can see we're in a very strong trending up move, with higher highs until the most previous two, but certainly higher lows throughout. And that is a very positive trend. It can be tough to break all-time highs, but when you do, price action tends to go crazy, so it would be normal to experience a couple of touches of this level liquidity zone, which I can drop a horizontal support and resistance line on there. But I've got plenty, as you see, when the drawings come on, and so 2 touches, 3 touches up there, that's to be expected when you're coming up to test it again. But being sitting above the 20 period moving average is very positive. Further, you could say that the RSI is showing reasonably good moves here. It's convergent with its lower highs, but that would be expected. Touch off the overbought zone, come back, consolidate. It's below the zone exponential moving average at the minute yet. I wouldn't say that that's a big deal. It's been doing that lots of times, and that doesn't really matter in trending bullish moves. It's not something to worry about. So that's the weekly time frame without the drawings on. Dropped out into the 2-day. You can see that in fact we've actually put in a higher high than this previous time, and that before here this was a different company, different liquidity, different value ratios, completely different story at that stage. And as we know, this is the greatest story ever told about the greatest show we've ever seen. So welcome to the future. And that being, let's look at that on this 2-day time frame. Let's draw out, let's turn on our drawings, some of them, and zoom out a little bit so that it's not so messy. And you can see that over this time frame there's been a wick, there's been a series of these wicks, with the slightly lower close on the wicks and the slightly lower closes on the body. You could say that this is truly indicative of the fact that we're currently experiencing a little bit of a negative trend. If you are to look at the strength of that trend, even on this time frame, you can see that actually it's the dominant, the people driving price action are actually those going long. The people that are short, right, the negative trend, the bearish thesis, and those that want to push price action down are really not in control of this trend, right? That which has been strengthening as price action has been going up, but as price action has been going down, the overall trend has been weakening. The strength of it down relatively weak compared to the strength as it's going up. So on the 2-day time frame, things are relatively positive. Again, with respect to the moving averages, which are a good way of measuring trend. Turn off all the other drawings and they become more clear. You can see that we were just below at the minute the 20 period moving average. Moving averages change their positions across different time frames because they measure the body closes of a certain period time frame beforehand. 20 period measures the average of the previous 20 periods, the 55 of the previous 55, and so on. So they're more representative of longer term trend the higher the look back period on each of them. And just for anyone who's interested, these are the look back periods I use with my analysis, so feel free to pause it there, and that's the colour that each of them are if you want to set up your own charts the same way. Anyway, regardless, again, what we're looking at here is a series of higher lows, and also in this time frame we can say there's a higher high, and so that puts paid to a lot of the bearish thesis that relies on Wyckoff distribution to underpin their whole theory. So now drop down to the daily. So now let's skip that and go straight to the 12-hour. And I was going to talk about how you can, when you're below this 20, you often see bounces on price action between it and the 55, and that's totally normal to be expected. And should we bounce off there, haven't put in any touch of divergence, which you can see we have done here, right? On this price action, there's a low. Here's a lower one. Nope, that's not low. That's not divergent. Nope. Between here and here, nope, here and here, nope. But we may see something should the price action drop below here, which I don't necessarily anticipate it doing, though if it does, we've got plenty of areas to pick it up, and we'll touch on them in a second. if it does drop below, then there'll be a bullish picture emerging, and that combine that with the weakness of the trend. There we're seeing like the Rick and Morty ellipse play out to a degree. Let's see how that goes. There could be a degree of volatility coming up, especially compared to relatively, based on what we're seeing here. But that will be today. We'll look at that when it happens. So you'll normally see a couple of bounces around this 55 and below there, coming in around the 170 level at the minute. As this will rise as price action continues, although it does lag to a degree. So we can anticipate any future bounce, should it happen, will be slightly higher than where these are positioned at the moment. You can see that there's another reason for price action to be caught should it drop down. Talking about dropping down, go down in the 4-hour time frame. You can see we're sitting on that 100 period moving average, and there's the 200 just below it. There's the exponentials. You've got the 20 touching the 55. That cross itself is inconsequential. It's not something I'd think about seriously. The 55 crossing below the 200, or the 100 crossing below the 200, perhaps more so. You can see on this time frame there's a tiny gap above us. It may be that we go up and fill that at some point over the next week. And that's your 4-hour time frame. Looking at those particular things, you can see the trend here that measured by the ADX is dropping off, and so the idea that price action, as it's been getting lower, you might worry and be anxious and think, oh, is this going to get worse? Well, this indicator here tells you that price action that's taken us down here isn't inherently strong and isn't something that you should necessarily worry about. And so there's something to pay some attention to. You can get that indicator on gumroad.com/rocky-outcrop. It says DMI with the color changes and whatnot and slightly different parameters in the background. And the important level to pay attention to on your DMI here is the 38, and when your ADX, that's this color changing lines above there, then you can say we truly are in a strong trend. And when you're this far below it, you can say, well, we definitely aren't. Dropping down to 30 minutes, and you can see this is a higher low, this is a lower high, bit of flux going on here, still what you would call chop, coming out of the oversold zone, hitting the moving average on the RSI. Let's see how that performs. If you get above it, it could then go on for a wee bit of a spurt and test its previous highs. If it doesn't, you could expect it to come in and truly test this low that we put in previously, or test the true level of support and resistance, which now we're down here. We can turn on these drawings. I can see where I've drawn some of these in at. Often they're dictated by previous opening body closes or other places where traders bought prices to a close on certain time frames. Generally speaking, those are the 12-hour, daily, 2-day, weekly. Sometimes I go as low as the 4-hour, and so that's where we are at the minute, more or less, give or take $10. That's one of them. So I couldn't definitively say we've closed above that, below that, or above that until we open and close above or below it. And going through it on one day's price action doesn't really give you a definitive answer. And as you can see, so there's your horizontal levels of support and resistance. Also in here we've got a couple of other things. This is like a long-term line. It'd be very important for us to open and close above there on any time frame. Above the 4-hour would be incredible, but on a weekly in particular that'd be spectacular. And then you've got other lines. We'll delete this yellow one, of which there's a number of them, right? And then we'll delete this trend, and then we'll remove these Fibonacci's and draw them in again so you can see where I came up with them, and hopefully that'll help you with your own analysis. We'll also turn off these moving averages for now because you can see where they are. And we'll leave these horizontal lines in because we came up with them for a reason. We can't be bothered drawing them again in 2 minutes when we show you why we came up with them. So here's your various Fibonacci's that we're operating through at the minute. I can still see I've got one on there. I'll take that off, baby. I'll remove that, and that was signifying the higher highs that you can see as far as low as the 4-hour. You can see that we're putting in that positive trend, right? So now that we've got the price action slightly clearer, we can do that. We'll go full screen on the prices, and we'll draw in our Fibonacci's. Here obviously I had a retest of this level. Like I'll look back on that and always be grateful for lessons I've learned in TA and what it taught me, and how I could call this move as and when price action was up here and that. So I'm going to leave that line on, right? And if you think that's confusing, tough cheese, right? So there's your bottom of your fib. Now you draw a Fibonacci in as you follow price action, you follow the trend, right? You move it from left to right because that's the way prices go, and you follow the trend. In this sense, it's obviously an uptrend, so you go from down to uptrend. The retracement is the retracement of that trend, right? It's in the name. And on that retracement, if you break the 236, it's likely you'll go to the 618 and that sort of thing, right? And here you go with 50%. That's the bullish return, right? And if you looked at different types of charts, you'd see different types of Fibonacci's and whatnot. And these are the ones I'm using, and that's your overall move on that particular thing. You could even make it slightly more accurate. But is it the dominant trend at the minute? Well, I'll let you make your own mind up about that as I draw the other Fibonacci's in. And we'll take it across here so it doesn't interfere. And I would say that anything that happened prior to this move here, I'd say that was of an old company, of a company that is no longer relevant, and it's poor to include that in your analysis. It suggests that you've not really thought about things, or you certainly haven't got an experience of this stock, which we do. So you're on the 4 hour and you've drawn in that one Fibonacci and you want to draw another one. Well, it's a good idea to then measure the subsequent retracement in the other direction. So here's your high from here into the low of this cup. You could say that on that particular move, right? We didn't manage to open and close for any significant amount of time below the 236, and when we broke through that, price action then went on. Fantastic. Took us back to our previous high. That's forming the U of what we were going on to talk about as a cup and handle. Cup with handle. The handle part of that is this retracement. It can be anything from 50 to 60%, which is what we're looking at the minute. It hasn't gone the full 60% on an equity like this in an environment like this. That's still very strong. William J. O'Neill came up with a cup and handle in 1988, and one of the definitive signatures of it is that when prices are below average, i.e. at the low of the cup, you can expect volume to itself be below average. And as you can see here from the volume profile, when prices were at the low, they were below the moving average as signified by the line on the indicator at the bottom there, the yellow line. So that all checks out. Subsequently, you would also look back on it and say, well, was there a really extreme and dramatic U, because they don't work so well? And no, there wasn't. It wasn't so bad. This is kind of textbook, though I hate the word. And then with such a strong signature and everything going well, the way these tend to play out in my experience is that they take a little bit of time here. They'll often involve a bear trap, which I expect that we will look back on this retrospectively, and lots of people will be talking about it. So what will happen when things do start to play out is that you get degrees of congestion along the way, right? Because people just aren't necessarily aware of the psychology that this sort of price action has on other people. And the answer is, when prices start moving up, it's very bullish. You'll feel it within yourself. That doesn't mean to say that prices are going to go up. That doesn't mean that a cup and handle, if it doesn't work, is in the end of the world, right? It's a continuation pattern. It works about 66% of the time, and as and when it doesn't work, the failure side of it doesn't have a measured move. It's not like that. It's not in any way a bearish formation to try and trade or as you scraffled around your potential thesis with regards to price action and technical analysis. So these are the levels I've defined as being interesting on the way up, right? They are break through the 236 and come in around the 618 on that Fibonacci retracement here. You'll expect to see a degree of stuttering, congested price action at this point. Breaking above the 618 on that Fibonacci would be important, but then you can also go on and draw more Fibonacci's, and you can say, well, we've also got this move subsequently from our lows here to our most recent highs, and on that we've come in and we've touched the 618, right? We've had that full retrace, we've had the proper cup with handle to nearly, right? And you can even go on into the golden pocket a wee touch more, and if you were to do that and see it in line with the divergence across the RSI and the MACD, for example, which we've already seen 2 touches of, a third one, that would be perfect. Add that to our Fibonacci and you've got yourself a 3-course dinner. Price action on the top side, go by the 236. You might like to see it up at the 618. As I say, in my experience, there'll be congestion along the way in these sort of moves, so you may see something around 244, 247, a bit of congestion, then up at the 263, 267, reclaim the 236 on this fib in at around 277, and then it's a hop, skip and a jump up to 343. After that point, I'll be very, very excited about price action, and that's why I'm kind of getting into the gear of doing longer videos, right, bell to bell, so that when it comes to MOAS, I'll be here available for you to keep you up to date on, with a totally honest and from a person who's not selling their shares, to keep you updated on price action. I've got your interest at heart, so feel free to tune in here anytime and catch a live stream where lots of friendly people in chat will say hello and you'll be with friends. So thanks very much, and if you learned anything, well, let me know with a little like or a comment. Thanks very much, and catch one of my live streams sometime. I think I've recorded this, so that should be a clip. Thanks, and see ya.